Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be expenses payable. Suppose if any expenditure paid we already discussed, right? If the expenditure is already paid, how to prepare a journal entry was already been discussed in my previous video. In today's topic, we are going to talk about expenses payable. Expenses payable, not paid, payable. Still it is yet to be paid, right? Those transactions we will discuss in this video. Number one, let us say salaries payable 1000. Next, commission payable 500. Number 3, interest payable 1500. Let us talk about these three transactions. So you will get a very good clarity in terms of payable transactions in this video, right? Let us talk from business point of view. Business. Salaries payable. Salaries payable to whom? Salaries payable to employees. Clear? Salaries payable to employees. Again, same two questions. When the salary is payable, we need to ask two questions. That is common. What comes in? What goes out? What comes in when the salary is payable? We receive services. We receive services from the employees. Clear? That is common. What goes out? Salaries payable. We have not paid. Payable. Not yet paid. So nothing goes out. We received services, but we did not pay anything. Right? At this moment, at this juncture, right? So we received the services, but we did not make the payment. So nothing goes out. If nothing goes out, what should be our question? Who is the provider of the services? Who is the giver of the services? Or who is the provider of the services? Who is the provider of the services? Employees. Employees are the providers, right? That is how you need to prepare. Services. What type of services? We are receiving their professional services. They are the ones, employees are the ones providing services. So we name it as what? Salaries. What expenditure definition says? Any amount paid for the services received is known as an expenditure. Here we are receiving the services but not paid, or payable also is an expenditure. Any amount paid or payable for the services received is also known as an expenditure. Again I am repeating. Any amount paid or payable for the services received is known as expenditure. Here, services received. We are naming those services as salaries. So this is an expenditure. Comes under nominal account. What is the principle under nominal account? Debit all expenses and losses, credit all incomes and gains. Right? So, salary is an expenditure. Debit all expenses. So, salary is debit. Clear? Then, what goes out? Nothing. Nothing goes out. Then the next question is, who is the provider of the services? Provider of the services are employees. Employees comes under personal account. Employees comes under personal account. What is the principle under personal account? Debit the receiver, credit the giver. Is employees receiving the services or giving the services? They are the givers. They are the givers. Credit the giver. So, to employees account. To employees account. Instead of crediting employees account, you can also credit outstanding salaries account. You can also credit outstanding. Employees is not around. You can still credit employees account. This is not wrong. But instead of crediting employees account, you can say outstanding salaries account. So that is the reason outstanding salaries account is personal account, but within personal account, you need to call it as representative person. Why outstanding salaries account is a representative person? Because outstanding salaries is representing on behalf of employees. Outstanding salaries account is representing on behalf of employees. Hence, outstanding salaries account is a representative person. It is a personal account, but within personal account, you should call it as representative person. So, what is the entry? Salaries account debit and credit outstanding salaries account. Are you clear? Let us move on to the next one. Commission payable. Now, business point of view again. Commission payable. Why should we pay commission? Because we received the services. So what comes in? Services comes in. What goes out? Nothing goes out. Why nothing goes out? It says payable, not paid. It is not paid. It says payable. Payable means amount is not paid. If the amount is not paid, nothing goes out. If nothing goes out, services received, but nothing goes out, then next question should be, who is the provider of the services? Who is the provider of the services? Provider of the services, name is not given here, so you can call them as supplier, vendor, or creditor. You can use any of these names. So these are the suppliers providing services. Clear? So services, what type of services? We need to name these services as commission. Why? Because we are paying commission for these services received, right? So let us name this as commission. So this comes under expenditure. Any amount paid or payable for the services received is known as an expenditure. So commission is an expenditure. Comes under nominal account. What is the principle under nominal account? Debit all expenses and losses, credit all incomes and gains. So commission account has to be debited. Commission account debit. Clear? Then who is the giver of these commissions? Supplier, vendor, or creditor. These are the three names. So these are the people, persons, right? So comes under personal account. What is the principle under personal account? Debit the receiver, credit the giver. Is he giving or receiving? They are the ones giving. When they are giving, what you need to do? You need to credit them as per personal account principle. Credit the giver. So credit supplier account, or vendor account, or creditor account. You can use any of the names. Instead of using their names, you can also use outstanding commission. You can use outstanding commission. Outstanding commission is being credited on behalf of the persons. Outstanding commission is being credited instead of a supplier account, instead of a vendor account, instead of a creditor account. They are the persons. So outstanding commission account is credited on behalf of personal account. Hence, outstanding commission account is a representative person. Outstanding commission account is a representative person. So, this is how the journal entry has to be prepared. What is the journal entry? Commission account debit and 2 outstanding commission account. Clear? Let us move on to the next one. Next one is interest payable. Interest payable. From business point of view, what comes in? Services. What are the services? We should have taken loan facility. Loan facility is the service we received, for which we are paying interest, right? So these services we will name it as interest, because we are paying interest for the services received, right? So let us call it as interest. This is what these kind of services, loan facility services, are being received. What goes out? Since it is payable, nothing goes out. If nothing goes out, your next question is going to be, who is the provider of these services? Who is the provider? Name is not given. If the name is given, you can put the name. But since the name is not given here, you can use supplier account, or vendor account, or creditor account. Any of these names you can use. Clear? So, services interest is the amount we are paying. So, comes under nominal account. What is the principle under nominal account? Debit all expenses and losses. So, this is an expenditure. So, interest account debit. As per nominal account, expenses have to be debited. Hence, I am debiting interest account. Who is the provider of these services? Supplier, vendor, or a creditor. These are all comes under personal account. What is the principle under personal account? Debit the receiver, credit the giver. Is he a receiver or a giver? Is the giver. Giver has to be credited. So, to supplier account, to creditor account, or to vendor account, any name you can use. Right? Instead of crediting supplier, creditor, vendor, you can also use outstanding interest account. See, there is no harm in creating supplier account. There is no harm in creating creditor account. There is no harm in creating vendor account. But how we generally prepare the journal entry here is we debit interest account and credit outstanding interest account. Here, outstanding interest account is credited on behalf of supplier account, on behalf of vendor account, on behalf of vendor account, or on behalf of creditor account. That means what? Outstanding interest is replacing a personal account. Outstanding interest account is replacing a personal account. Hence, outstanding interest account is also called as a personal account. But what type of personal account? It will be called as representative person. It is called as representative person. Right? I hope you are clear about payable entries now. Clear? If you like the content, please like my video, subscribe to my channel, and share this video with your friends and colleagues. Thank you so much.